It's Brian Preston, the money guy.
This is from David Van Single. He said, I heard a rumor that the Fed might be lowering rates, unconfirmed, in parentheses. At what point does it make financial sense to refinance? You know, it's really interesting. We haven't done a show or spoken to refinancing a lot lately, but we do have some thoughts on when and how you approach the decision to refinance. Generally speaking, here's what the knowledge used to be, the guidance used to be. We would all say if you get a rate reduction of about 1%, that used to be kind of the threshold that you would look at. So if you were at 4 3/4 and their new rates are at 3 3/4, you ought to look at refinancing. I think that now that interest rates have gotten so low, or where they were so low over the past 5 or 6 years, we think it's really a mathematical thing where you look at, okay, if I take my interest rate reduction and I calculate my new payment, and I were to pay it on the same schedule, because that's the big thing. You don't want to reset your timeline.
You just said the key thing that I was about to say. That's
Did
good.
I steal it?
I like it. No, that's good. I want
you calculate the same timeline and you figure out your interest savings. Are you going to be in the house long enough, whether it's 3 years, 5 years, 7 years, 10 years, 15 years, to cover the cost of the refinance? I'm going to say that again. You take your interest rate differential, you calculate your interest savings, paying the same amount. So if you have a $1,200 mortgage, you refinance, keep paying on the same schedule to get it paid off. So $1,200. Calculate how much more principal you're paying or how much interest you're saving and figure out how many years do I have to be in the home to offset the cost of closing, the cost of the refinance. If that is favorable and advantageous, yeah, might make sense to refinance.
So the big takeaways that Bo's talking about is that just make sure every time you do a real estate transaction, it's expensive. So you have to make sure that the savings are big enough to overcome that expense. The second thing, this is the biggest mistake I see people do, is they refinance to get that lower interest rate. They get a lower monthly payment, and they start just paying that same lower monthly payment. Well, all you've done now is you've reset how long you'll be paying on that house. If you were on a 15-year mortgage or 30-year mortgage, you're now back on a 15-year or 30-year mortgage instead of maybe you were on a 11-year mortgage or maybe you're on a 9-year mortgage because you've been paying for the last 6 years. Just make sure, and that's what Bo was talking about, make sure that your payoff date is still going to be on the same schedule so that you can actually take advantage of the lower interest rate and pay it off quicker. Because it breaks my heart when people just never get out of debt. Yep. They just get a lower interest rate, that's a celebration, but they don't do anything with it to where you could, in theory, you should be able to take that lower interest rate, pay the same thing, and actually take those savings and pay it off the debt even quicker.
Yep. Love it, love it, love it. So
that's a great question.
That was a great question.
We haven't covered refinance in a while, and it's primarily because we've been more in a rising interest rate. He also asked, though, the Fed cutting the rate, that's all 8-ball, shaking the 8-ball, scratching it, and seeing what the magic crystal 8-ball is going to tell you. We'll see. I mean, there's been such strong data coming out of the economy. I don't know. They were originally talking about exactly what he said, a 0.5% cut. I don't know that I believe it, and I don't get into that pontification because that's the stuff that sells. Well, that's the stuff that your financial media is doing. They don't know either, by the way. They're just making junk up.